Oh, you mentioned us potentially being in the fourth inning here of some of the AI kind of landscape and this next iteration, we should say, of AI, because it is a kind of decades-long journey that we've had just to get here. But all these things considered, we've heard a lot from companies like Nvidia about a future where there is a 1 million chip data center. For Nvidia, what more do you need to hear from them when they report this earnings season about how close we could be to eventually seeing that? When are we going to see, from your estimation, these 1 million chip data centers?
That's a tough question to answer. That's tough to tell. So unfortunately, at times improvements and/or innovation in technology suddenly skyrocket, and at times, we basically feel satisfied with what we have, and we continue to utilize that. So it really remains to be seen. It could be 5 years, it could be 10 years. I can't really answer that question. But in terms of NVIDIA, though, I think they've done a pretty good job by basically having that full stack of products, right? Having that full stack of offering around their GPUs. Because some of the main issues that we're facing overall when it comes to the AI cycle, for example, is power, is electricity. I mean, those data centers need to be run 24/7, especially when you're talking about the training side of it. So the question is, can those chips operate a little bit more efficiently? How can you allocate, again, more efficiently power to, at certain times to certain parts of the servers and the data centers to certain tasks. And what's good about NVIDIA is it does provide the software that can help do that. So that's just one example of that full stack that it provides. So, given their current leadership, of course, the first mover, and they've got a dominant market share, it seems that all of that full stack may create a switching cost for those guys. And that's a pretty good moat, pretty good competitive advantage to have. So I think they're still actually very well positioned in this entire AI cycle that we're experiencing right now.
In a dramatic turn of events, the once steady world of semiconductors and AI has been lit ablaze by one name, Nvidia. For a brief, spectacular period, Nvidia outshined the perennial tech heavyweights, Apple and Microsoft, to claim the title of the world's most valuable company. This unexpected upheaval has left investors and analysts buzzing. But what happens when a titan like Nvidia finds itself in the crosshairs of ever-increasing competition? And why do some of the most respected figures in investment, including billionaire Elon Musk, who continues to rally behind Nvidia despite its recent market turbulence? That's what we will answer in today's video. So please, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Investors right now who've been tracking the ticker symbol NVDA, they're also seeing in the second half of 2024, Nvidia shares down right now by a little bit more than 10%. All that considered, what would you say to those who are looking to try and figure out what a viable entry point is to Nvidia, even at this juncture?
Yeah, it's tough. It's declined a little bit. It's given back. I mean, there is some sense that there is some rotation into the SMIDs, or I should say, small mid caps. As we've seen, Russell 2000 perform pretty well. But in terms of our valuation, we value it currently at around, between 140, 150. So I would say probably some additional downside may be needed for new investors to come in. But for investors that are in the name right now, I think it's better to remain with the leader in the market, in the AI market, and that's benefiting from all fronts when it comes to AI development, and AI growth. So that's my view on NVIDIA.
Ali Morkarabi, who is the Senior Equity Analyst over at West End Capital Management. Hey, great to have you here with us this morning, and thanks so much for the timely insights and analysis. Appreciate it.
NVIDIA's dominance in the AI hardware sector is nothing short of astounding, with the company claiming an estimated 98% of the GPU market for data centers this year. Nvidia's offerings have enabled the development of groundbreaking AI models like ChatGPT, solidifying its position as a leader in the industry. However, this dominance has not gone unchallenged. Both AMD and Intel are making aggressive plays to encroach on Nvidia's territory, introducing their own AI GPUs, Intel with the Gaudi 3 and AMD with the MI300. These new entrants are poised to disrupt Nvidia's stronghold by offering competitive alternatives that promise to deliver high performance and efficiency. The competitive landscape is also being influenced by significant moves in the financial sector. Some heavy hitters, such as Stanley Druckenmiller and Steve Cohen, are hedging their bets and parting ways with Nvidia stock. This shift in investment strategies suggests a belief that Nvidia's market supremacy may face increasing pressure from its rivals. As the AI hardware market continues to evolve, the battle between these tech giants will be one to watch, with each company striving to outdo the others in innovation and market share. The outcome of this competition could reshape the future of AI technology and its applications across various industries. On the other hand, Elon Musk's latest comments have sent very bullish signals to Nvidia stock investors, reigniting faith even amidst looming competition. Could the optimism from high-profile figures like Musk be the secret sauce that solidifies Nvidia's future prosperity? Or will investor apprehension persist? Well, let's answer this alluring question. Hello, everyone, and welcome back to Investocracy.
All right, market trying to go the way of small caps. The cost of semiconductors just flipped red. Chips are down. Nvidia's lower by about 2% right now. Let's talk some more about the earnings ahead of that sector. Tom White looking at options. Matt Bryson, the expert, joining us from Wedbush, Senior Vice President of Equity Research. Matt, Advanced Micro coming out tonight. Is this an insightful stock for the whole AI trade, or are they too far behind?
I don't think they're too far behind. I think, though, with AMD, what they're going to give you is very company specific. So the question is, do they raise the guidance for their data center GPU business, so their AI business? Previously, they'd said north of $4 billion. I think if they're able to lift that number at all, the stock goes up. And we've seen them lift it by about 500 million each quarter. If that number stays steady, the stock goes down. But that tells you more about how AMD is performing with its MI300 than it does about industry demand.
Okay. So AMD at this point, are they able to get enough growth from these new products to offset the trailing weakness and the cyclical stuff and the devices and all that?
I actually think that their other businesses are pretty solid. So there are some questions around Xilinx. Certainly, you've had companies that are more exposed to industrial and auto and telco, and some of Xilinx's core customer bases who've struggled a bit. But at the same time, the server market has rebounded pretty strongly. I think AMD is a share gainer there. I view that as their second most important market after graphics, and the PC market's okay. And then within that market, you've had some recent stumbles at Intel on the desktop side of things. And so I think AMD is pretty well poised for share gains there as well. But the value of the company at this point, a lot of it is based on what they're going to be able to do in AI. And again, that's less about what the industry is doing and more about what AMD is doing and how much share can they get versus NVIDIA.
Judging by Elon Musk's recent remarks, the answer is still a resounding no. During Tesla's earnings call, Musk couldn't stop singing NVIDIA's praises. "I'm incredibly impressed by NVIDIA's execution and the capability of their hardware," he said, adding that NVIDIA GPUs are so in demand, it's often a challenge to procure them. Musk's endorsement doesn't come lightly. As Musk, who co-founded OpenAI and oversees several tech-driven enterprises like Tesla, X, and xAI, sees NVIDIA's hardware as indispensable. If a tech magnate so deeply embedded in the AI landscape offers such effusive praise, it speaks volumes. And sure, there's a lot of noise about competition, but for now, NVIDIA's dominance remains unchallenged. According to MarketWatch, Nvidia continues to report record revenues, and astonishingly, their latest quarterly revenue surpasses what the company used to earn in an entire year just a few years ago. And it isn't just Musk who shows unwavering faith. As per a recent Forbes report, demand for Nvidia's AI hardware is exceptionally high, causing prices to soar. These aren't just casual buyers. These are major tech companies with massive requirements, willing to pay a premium to secure the best GPUs on the market. When Stanley Druckenmiller cuts his Nvidia stake, people take notice. An investment titan who has managed an average annual return of 30% over 2 decades isn't someone you ignore. Druckenmiller's exit signifies caution, particularly at a time when AI stocks may seem overinflated. Investors like Steve Cohen and Israel Englander pulling out adds to the narrative that Nvidia might be due for a slowdown. But let's juxtapose this skepticism with Nvidia's ongoing tech advancements. This company isn't resting on its laurels. Nvidia's upcoming Blackwell platform is generating buzz and is positioned to eclipse any current offerings in the market. Analysts from Bloomberg have indicated that the Blackwell architecture could be a groundbreaking release, sustaining Nvidia's edge over competitors. Contrary to the doom and gloom outlook, Musk's comments ensure that Nvidia's blistering growth isn't a flash in the pan. The company's commitment to innovation is enviable, updating their top-performing chips annually. This relentless pace of innovation means that AMD and Intel will have a hard time keeping up, even with their latest product releases. Moreover, the AI market itself offers plenty of room for multiple players to coexist profitably. It's a burgeoning market that is likely to exceed $1 trillion by the end of the decade, as per analyst estimates from Statista. This implies that while AMD and Intel will likely carve out their own niches, it doesn't spell doom for Nvidia. But why Nvidia still shines bright in the AI market given the conflicting signals, one might be left scratching their head, contemplating if Nvidia is still a buy. The answer lies in analyzing current market conditions and Nvidia's valuation metrics. The recent stock split brought Nvidia's shares down to about $103, making it more palatable for average investors. The stock saw an immediate rise to around $135, but then fell down to $120, then $103. Today, it's trading below its post-split price. Here lies the intriguing part. Despite these fluctuations, Nvidia is still incredibly strong. Their forward price-to-earnings ratio currently stands at around 39.87. To put this in context, Musk's Tesla trades at a higher PE ratio, as does AMD, making Nvidia relatively undervalued given its market dominance and future growth prospects. Additionally, the gap between demand and supply continues. Nvidia's GPUs are not just scarce, they're rare gems that companies are fiercely competing to obtain. This unmet demand keeps Nvidia in a sweet spot concerning pricing power. On top of this, Musk noted that prices for Nvidia's GPUs have escalated solely due to their scarcity, and this scarcity is not being abated by rival offerings. Furthermore, Nvidia isn't only about hardware. The company has astutely diversified into software and sovereign AI, ensuring multiple streams of revenue. The upcoming launch of the Blackwell chip promises to be another revenue bonanza, potentially lifting the stock significantly in the quarters following its release. So should you invest in Nvidia as soon as possible? Let's answer this. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So the hardware side, PCs, you think that we'll see growth in that market again?
I think it's growing. I think when you look at what the Taiwanese companies and Taiwanese supply chain who supply into all the big PC OEMs have said, Q2 was a little bit better than expected. There's some questions about whether that was demand pull-in versus actual end customer demand getting better. But things certainly aren't worse than had been expected there 3 months ago.
Okay. So like mid-single digits, upper single-digit top-line growth, is that kind of the general expectation for AMD? I feel like that's kind of what I was saying.
I think that there's a whole lot of variance depending upon what they can do in that AI space. So I mean, quarter over quarter, I'm looking for, something within that mid-single digits growth range in Q2. In Q3, I'm looking for more like double digits growth. But again, a lot of that is going to be driven by, are they doing 4 billion in data center GPU revenues, or are they doing 4.5 or 5 billion this year, or something better than that? And those numbers, the delta in those numbers, gives you very different growth profiles for the second half of the year.
So should you jump on the Nvidia bandwagon while it's trading at a relatively bargain price of under $103? A realistic look at both the macro and micro factors suggests the answer is definitely an enormous yes. Nvidia's growth prospects are robust, underscored by its unparalleled innovation cycle and the sheer scale of demand for its AI hardware. Sure, you can point to the increased competition from AMD and Intel, but it's clear from the market dynamics and expert endorsements that Nvidia isn't going anywhere soon. The Blackwell architecture promises to secure Nvidia's leadership in the AI GPU sector. And with the company posting record-breaking revenues consistently, it's safe to say there's still considerable upside potential. Considering the stock's current valuation and the historic growth tied to Nvidia's technological advancements, one can reasonably expect that this is a lucrative opportunity. The AI market is not just expanding, it's exploding, and Nvidia is positioned right at the heart of this seismic shift. In closing, the stock market is rife with opportunities and risks. The recent dip in Nvidia's stock price might be a golden window for investors looking to make calculated moves in the high-growth AI sector. Nvidia's innovative edge, coupled with a solid market position and the backing of tech luminaries like Elon Musk, makes it an attractive investment. What do you think? Is Nvidia poised to weather the storm and come out stronger, or will the competition chip away at its dominance? Share your thoughts and join the conversation about the future of this tech giant. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.